Hey everyone, it's June 23rd and it's Tuesday, and I wanted to share with you a new video of some of the summary events of what happened last week and what's been happening this week. Hopefully, it's a good balance of information to understand how the economy is developing with recent events. So here is what I'm planning to talk about today. What happened last and this week, some market correlations that I want to keep in mind, and my thoughts. So, starting with COVID-19 or coronavirus, we're seeing some states in the country, in the United States, reopening and getting into phase one, phase two of reopening businesses. And it's clear that those states are experiencing an increase in COVID-19 cases. So many are arguing that this is wave two. Some are arguing this is actually not wave two. It's still within wave one. But you can see the quote here from the World Health Organization saying that pandemic is evolving, and unfortunately we see. So as many of you know, I'm from Iraq, and we see a very significant increase in COVID-19 cases in Iraq, and devastating news that we heard over the weekend of Ahmed Rabi passing away. So may his soul rest in peace. He's one of my role models, to be honest with you. So that was really sad news, and just to see the country almost collapsing because of how many cases are hitting the hospitals and the health system that's unable to sustain it. So, what we saw saw it start in Iran, and Iraq seemed to be, doing okay for a little bit, and now it's, spreading all over Iraq. So COVID-19 is not even close to be, over, and maybe even if you put it on a chart, we might be halfway through. So we'll see. Could be second wave, or it could be, halfway through, one wave. So anyway, that means, and we see also more cases in China, New Zealand after, declared coronavirus free, and then overall 2.1 million cases and probably more of infections. So how does that relate to the economy? Well, things are just picking up from, having almost zero activity within airline businesses, hospitality, and service industry. So airlines saw a little bit more activity. That was good news. You saw the stocks skyrocket recently, and now for last week and this week, as I called it, stocks have been going down. I want to focus on American Airline because I've invested in it and then I sold it, not near the highs, but with significant gains. But I'm at the point where I'm starting to give up on American Airline because they're getting into more debt. And to be honest with you, all airlines are doing this. This is not an American Airline specific situation. All airlines are adding more debt, issuing more debt, but it won't be as bad because they don't have as much debt. So, but American Airline is just going to be sinking in debt sooner or later. And think about this. With the second wave, think of what second wave hitting, or more COVID-19 cases hitting us, this is going to cripple the airline industry. And so you just need to be cognizant of that when you're investing in the airlines. Next topic is gold. So if you've noticed, gold prices are at a 7.5-year high. I'm not surprised because it's led by safe haven demand. So, but here's the interesting part. Because of the lower gas prices and oil prices, countries like Russia, countries like China, who have also had their economy shrink significantly, have had a lot less demand on gold. So their central banks are not ordering or buying as much gold. But investors who are seeing that we're experiencing historical low rates, we might get into negative rates, we don't know. Some argue yes, some argue no, but that's really beside the point. We're seeing stimulus, and we're seeing more aid packages, and possibly a lower dollar value, and that's all really good news for gold. So 7.5 year high, and today it broke 1750. So that's you know, good news for gold. It could go all over to 2000. I read an article about a Morgan Stanley analyst who increased their expectations for gold to go 2000 instead of 1800, I believe, within 6 months. I got to review that article, but look it up. Okay, housing market. This is within correlation in the market. So the housing market has witnessed a bit of a recovery in June compared to April and May. It's still in a decline. So you can see here in the quote, home sales are expected to have declined 5.6% in May to a seasonally adjusted 4.09 million units, up from 17.8 plunge. So we got an 18% decrease in April, about 6% decrease in May, and we're still going to probably see a decrease in June. We're still in the month, so I can't tell you for sure. But that tells me that it's recovering. But look at that next point. Jobless claims total 1.5 million, worse than expected as economic pain persists. So who buys houses? I mean, people who have jobs or have income, right? And if we're seeing more people filing unemployment, less people are going to buy houses. So even though that we're seeing a trend of recovering housing market, that wouldn't last long if the employment market is declining. So keep that in mind as well. If you're interested in looking into the housing market, it has not hit the bottom. I can tell you that for, very confident, with a lot of confidence. That's what I'm trying to say. So here are my final thoughts. Airlines will continue to fluctuate as second wave or more virus cases hit us. So it will be a good buying opportunity once a vaccine is developed or things get better, which could be 6 months, could be a year. Nobody knows really. But if you're in the long term, I think it's a good buying opportunity once it goes down a little bit more. So I'm watching out for it. So if it goes down maybe 5% more, overall I will buy more airlines. I will avoid indebted ones like American because they are issuing debts like crazy. So I will not be buying them. Tesla is overpriced. If you're interested in buying Tesla, please don't. I'm not giving you advice really, but don't buy Tesla. They're way overpriced. And tech stocks are probably going to persist through uncertainty. If you're asking, if I'm sharing with you my opinion, they're overpriced for my liking now to buy for short term. But if you're in it for the long term, go ahead and buy it. They're probably going to decrease if we experience a long-term recession, because those stocks are not immune to recession, but they will decrease if we experience that, which I believe will be the case. So I'm waiting for that time to buy them. If you're going to buy and wait 10 years, then by all means, I think go ahead and buy those. I'm looking at stocks like AT&T that have a decent dividend yield, and they haven't really been very fragile. So I might actually buy AT&T if they go a few percentage points down and see it's a good buying opportunity, especially for the dividends. And I might keep them for long term, which is contrary to my investment philosophy. I like to do short term. And then the other thing that I do long term is gold and silver, because those are really your safe assets. When things go down, you can count on your precious metals. And so I'm bullish on gold and silver, and they're breaking their resistant levels. And so I can imagine by the end of 2020, gold will be in the 1900s, if not 2000s, if things continue to be, the way they are, and more stimulus packages are issued by the federal government. So, and we'll see with the elections too. Things might get a little bit crazy. Who knows? So that's all I want to share with you today. Thanks for waiting. I know these videos are a little bit overdue. But I hope that was helpful. I'll try to make one as soon as possible, and I'll see you in the next one. Thanks, guys.